Here's a question: what if I told you that you could earn 4 to 5% on your savings right now, with absolutely zero risk? No stock market roller coaster. No complex investments. Just money sitting safely in a bank account, making more money for you while you sleep. Sound too good to be true? It's not. And millions of people are already doing it. So why aren't you? Welcome back. Today we're breaking down high-yield savings accounts, one of the most underrated financial tools that most people completely ignore. By the end of this video, you'll understand exactly how they work, whether they're right for you, and why your regular savings account is basically costing you thousands of dollars. Let's start with the basics. A high-yield savings account is essentially a regular savings account, but with one crucial difference: the interest rate. Your traditional brick-and-mortar bank probably gives you a laughable 0.01% interest rate. It's basically nothing. High-yield savings accounts from online banks are currently offering rates between 4 and 5.35%. That's a massive difference. Think about it this way. Imagine you're renting out a room in your house. A traditional bank pays you almost nothing for letting them use your money. A high-yield savings account pays you actual rent. Competitive rent. The reason online banks can offer these rates is simple: they don't have expensive physical branches. No fancy lobbies. No security guards. No mortgage payments on prime real estate. They pass those savings directly to you in the form of higher interest rates. Now let's talk real numbers, because this is where it gets interesting. If you have $10,000 sitting in a regular savings account earning 0.01%, you're making $1 per year. $1. That's embarrassing. The same $10,000 in a high-yield account earning 4.5% earns you $450 per year. That's the difference between watching your money stagnate and actually having it work for you. Scale that up. $50,000 in a regular account? 50 cents a year. In a high-yield account? $2,250 per year. And $100,000? $500 versus $4,500 annually. These aren't small numbers anymore. Over 5 years, that's a difference of over $20,000 on a single $100,000 deposit. Just sitting there. Earning interest. Here's what makes this even better: high-yield savings accounts are FDIC insured. That means your money is protected up to $250,000 per account. It's completely safe. You're not risking anything. You're not buying volatile stocks. You're not timing the market. You're simply letting a bank borrow your money and paying you for the privilege. But here's the catch that nobody talks about. Interest rates change. A lot. They're tied to Federal Reserve decisions, and they move up and down based on economic conditions. Right now, rates are relatively high because the Federal Reserve has been raising them to combat inflation. But eventually, they'll come back down. Maybe dramatically. So if you're counting on earning 4.5% forever, you're setting yourself up for disappointment. Enjoy it while it lasts, but don't build your entire financial plan around current rates staying constant. Who should actually open a high-yield savings account? Anyone with money they're not immediately spending. Emergency funds? Perfect. That's maybe the single best use case. You need the money accessible but not tempted to spend it. A high-yield account lets you earn meaningful interest while keeping your cash liquid. Down payment savings? Absolutely. If you're saving for a house over the next few years, a high-yield account keeps your down payment protected and growing. Sinking funds for car repairs, medical expenses, or vacations. All excellent candidates. Here's the one thing high-yield accounts are not: a substitute for investing. If your money is sitting there for decades and you're trying to build real wealth, you need stocks, bonds, and a diversified portfolio. High-yield savings accounts are for short to medium-term goals. Money you'll need in the next 5 years. After that, inflation will actually eat into your returns because the interest rate usually won't keep pace with rising prices. So what's the move? Open a high-yield savings account. Most online banks make it incredibly easy. It takes 10 minutes. Move your emergency fund there. Move your short-term savings there. Keep your checking account for day-to-day spending, and let the high-yield account do the heavy lifting on interest. It's honestly one of the easiest wins in personal finance. The bottom line, your money is either working for you, or it's working against you. Right now, if it's in a regular savings account, it's doing nothing. That's lost money. Real dollars that could be in your pocket but aren't. High-yield savings accounts aren't flashy. They're not exciting. But they're incredibly effective at growing your money safely. Before we go, quick disclaimer, this is not financial advice. Always consult a licensed financial advisor before making major financial decisions. If this video helped you understand high-yield savings, smash the like button and subscribe for more practical finance breakdowns. Drop a comment below with your biggest money question, and I'll see you in the next one.